Hey, raise your hand if you're struggling in real estate. I don't care if you're new. I don't care if you're really seasoned. Either way, you're struggling and you're looking for better ways to close more deals. You're in the right place. Each week, I pick a random house off the internet, I analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. We both know you're going to get some value out of this. So hit that like button and share this with somebody who might also get some value out of it. This week, we are taking a look at 4118 East 29th Street, Spokane, Washington, 99223. They're asking $295,000. They just had a $75,000 price drop. That's huge. It's a three-bedroom, two-bath, just under 2,400 square foot. And wow, that's a lot of views. It has been on the market for 101 days. All of those views and only six favorites. That's pretty bad. But let's take a look through the photos and see what they are telling us. It looks like their heating and air system is a mini split. I've never been to Washington State, so I don't know what the temperature's like. I'm assuming it can get really cold, but I don't know. These trees are they're trimmed back from the house, but those sit way too close to the house for my comfort. All right, so it looks like almost like a split foyer. They built kind of cool looking. Looks like a gas fireplace. Opens up into the kitchen. Pretty nice. Looks like we got some wood look tile on the floor and the walls. So we got a wall unit AC here. And some more of the wood look tile. That might be LVP. I don't know. I love these linear windows. They let in a ton of light, but still keep the privacy. Good sized bedroom. That's probably the master. So we got dual vanities, toilet, tub shower with tile. Another bedroom. All right, so we got a wood stove downstairs. Looks like a gas line coming to it. So that just could be a gas stove, which I'm sure works really well. And I'm assuming this is the basement. Another room down here. Washer and dryer up on a little pedestal inside the bathroom, or at least a half bath. Nope, nope, there's the shower. And a little workshop in the basement, it looks like. Walk out. Little storage area, nice and insulated. Don't know where that is, but nice little patio out back. Got a little sinkage here. Might just need to be resanded. Fenced in yard. Decent sized yard. Wood siding. Oh, I love when they do floor plans. So we got two bedrooms on this level with a dual opening. Another bedroom downstairs and this open room. I think this is that workshop area. This is where it is. Store. I'm guessing that's supposed to be storage. That looks like that little spot there, probably underneath the screened balcony here. That makes the most sense. All right, so that's all the pictures are showing us. Let's see what the agent is telling us here. Motivated seller, all offers considered. We like to see that. Um, Levels, 2,400 square foot. Potential fourth bedroom, so it's just an office. Doesn't have a window or a closet, I guess. Not telling us a whole lot. See what else we can find in here. The area is 40% renters, median age 41, average house size is 2,100 square foot, so we're a little above average there. Average household income just over 91. This area is almost 30% commercial property, 40% college grads. And let's see if we got any comparable sales. Wow, property taxes are pretty bad out there, almost $4,000 a year. So obviously this thing's been for sale for quite a while now. They started at just shy of 350, 25, went under contract. They didn't tell us what it went under for. Um, and then pretty quickly back on. Something went bad there. And then just made a big price drop a couple days ago. All right, our solds 342, 340, 245. This is a 3 bedroom, 2 bath, 1,700 square foot. 3.2, 1,600. Bigger than all of these. A 4.2. Wow. I mean, that's got a big hole in the roof. Let's see what this one looks like. Ooh, yeah, this is a shell. So this property could not get financed just because of the condition it's in. Wow. And they even did floor plans on them. Good for them. Right? Let's see what this one looks like. 245. It looks a little dated, but I'm not seeing a whole lot there. What about this one? I'm not seeing how this sold for. Again, I don't know this area, so always check with the local. Don't trust a guy on the internet. What else? This one just sold recently. I don't I don't know. What am I missing? If you know this market and you know what I'm missing as to why some of these sold for quite a bit more, I don't get it. You got less square footage. I know what it is. There's only 2 bedrooms on the upstairs level. I bet that's it. All right, so we're gonna take an average of these here. So pull out my calculator. And again, this is just for example purposes. So 342 plus 340. Plus 245 plus 256 plus 357 500 plus 358 divided by 6. That gives us 275 624. We're going to use that number. Now, this is a horrible way to come up with your ARV or after repair value number. What something's worth when it's completely fixed up. This is a horrible way to do it, but I don't know this area and I don't see how some of these other smaller properties are selling for a whole lot more outside of it just be the style of the house or there's only 2 bedrooms upstairs and most families want 3 bedrooms upstairs. I find that as a realtor here in my market in Maryland, we're just going to go with that. Now we're going to jump over to the invest nest and try to analyze this as a cash deal. So in the invest nest is saying the estimated value on this thing is way higher than even they listed for originally. So we know that number is not going to work. Their estimated rents, what they're guessing is 1850, and we're going to double check with HUD on that in a second. If you want to try out the Invest Nest, I will have codes and links down in the show notes for 1 week for free and 50% off your first month. Try it out, see if you like it. If you do, come back to this video and let me know in the comments. Did you like it? Did you not like it? And why? I appreciate it. Another thing that they do is offer skip tracing. So if you want to be able to contact the owners directly, they offer that in the monthly price. They don't charge extra for it. They're guessing the mortgage payment's 22, which we wouldn't want to take that over on a subject to or anything like that, because just based off the average rents, the math doesn't work. Looks like they got a first and a second. No, second's a conventional. So they got a HELOC. Yeah, they're really upside down in this thing. Mortgage. Well, they've been trying to sell this for close. It looks like they bought it for, ooh, wow. Yeah, they paid 377 for this and then tried to start selling it at 347.5. They're just trying to get out. They're really stuck. Yeah, I would say they're motivated. All right, let's break some numbers down here. 111 East 29th Ave. Purchase price. So we said our purchase price or we said our ARV was going to be 275,624. For our offer price, we're going to offer 70% of that. That's going to give us an offer price of 192,936. And typically I would do 70% of ARV after repair value minus repairs. I don't think this house needs any repairs. I think it's in great shape. So we're going to go off of those numbers. Did that not want to paste? All right, 129,936. 129,936. And closing costs, we're going to offer to pay both sides. So that would be 4%. Our lender is going to charge us 2 points. That's how they get paid. 2 points and or 2%. So 2%, 2 points. So that's what we're paying the lender. No improvements. We think it's perfect. We'll put 25% down because that's pretty much what every lender wants. I got quoted last week at 6.75, and we want a 30-year term on this sucker. All right, so the Invest Nest is saying 1850 for rents. I want to check HUD on a 3-bedroom as well. And they're saying 2088 is the max that they will pay. So we're going to split these numbers a little bit and just go with 1900. Does that sound fair? 1900. I am not using Rentometer right now because I am blocked out. Again, I'm cheap. I don't pay for it. I should. It's an awesome site and it's like $8 a month. Check them out, and I recommend using them. And for insurance, I like to factor in $125 a month or $1,500 a year. Property taxes match what Holmes was telling us. Property manager is going to cost us 10%. Tenant's going to be paying all of our utilities, and there is no HOA. Reserve fund. I call it my war chest. This is 5% off the top for repairs and maintenance, vacancy loss, and capital expenditures, otherwise known as CapEx. CapEx is going to be your deferred maintenance or your big ticket stuff like a roof, an HVAC, things like that. So 15% off the top every single month is going into that war chest account because this is real estate. It's not a matter of if something goes wrong, it's when. We'll plan on our property appreciating 2% per year. I like to increase my rents 2.5% per year. We'll plan on holding it for 10 years, and we are real estate investors. We don't pay full commission. Let's see what these numbers look like. You were looking to see if it cash flowed, not me. I know. If you haven't done so already, hit that like button and share this with somebody that's going to get some value out of it also. Now let's see if it cash flowed. Well, it's cash flow positive, whopping 4120 a month for almost 60 grand out of your pocket. Mortgage is just under 940. Let's see, cap rate is more of a multifamily thing, but I think it falls in line with a good cap rate. 6 to 9% is kind of where I look as a multifamily investor. DSCR, it barely makes it. We're just barely over a 1 to 1. A 1 to 1 would be a break even. DSCR stands for Debt Service Coverage Ratio Lender. If you have questions on that, drop them in the show notes. I'm happy to answer it. But that's typically what I use as an investor to buy properties. Cash on cash returns, not even 1%. It's not a solid deal. Return on investment, 10%. Pretty good numbers, but 1% rule. If you follow that, it does not work. And here's all of our breakdown. Another thing I love about this site, they break all the numbers down so you know where every single dollar goes. And once we hit, now we're hitting a cash on cash return at 10 years. At 10%, I don't know because it's only 7% at 10 years. With the increased value and increased rents. All in, it's going to take us a little over 3 years to recoup our original capital back. Not bad. Typically, I look between 3 to 5 years. If I can get all of my money that I put into it back in 3 to 5 years, and then after that, I'm just using bank's money or OPM, other people's money. That's not a bad deal, but the rate of return on that's pretty awful. Now it's time to do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. It will also be in the show notes. We're thinking our ARV or after repair value was 275, 624. We're just going to put 275. And our purchase price on the cash side was 193, just round up. And on a creative purchase, because the way I'm working this one is a seller finance deal. So we're asking that seller to be our bank. So we got to get a lot better on that number. So let's see if we can just throw 275 at them and get a really good interest rate of 3.5%. Now we got to figure out our PITI or principal, interest, taxes, and insurance, our mortgage payment. For that, I like to use bank rate. We said our offer price was going to be 275. I only want to put down 5%. Our interest rate is going to be 3.5%. Our property tax is 320. 20, and our insurance is 125, no HOA. All right, so that gives us our PITI, principal, interest, taxes, and insurance of 1559. Plug that number in. 59. We said our rents were going to be 1900. Let's see if this works. Ooh. Yeah, that's a horrible creative deal. All right, let's try 250. That drops it to 1511. Still negative. Goodness. Those property taxes are killing this thing. maybe 200. And probably move the needle a good bit. 1298. Drop that down to 200. All right, so that's 3.5, but it's rounding to 4. Our new payment was 1298. All right, so that does work. That's a long way off though. Uh, so with potential rents of 1900, our gross cash flow is 602, 285 to the war chest, 190 to the manager, and that gives us a net cash flow of 127 a month. Not a whole lot to get excited about, is it? All right, cash to the seller would be our down payment of that $10,000. Agent commission, they're really not getting it done. Let's see if we can throw 500 bucks. Nah, it's only 100 days. We'll be generous and try to throw $1,000 at them. Assignment fee, we're not working with a wholesaler, so we don't have to factor that in. Closing cost is going to be that same 4%. Renos, we said it's perfect. We're not going to do anything. 2 months of holding is just 2 months of this mortgage payment over here, your PITI. Nothing in arrears that we're aware of. And a good TC or transaction coordinator will cost you about 1,500 bucks. So all in, it will take you about 17 years to recoup your $26,000. But 26 is a lot different than 60, and you're making less on the cash deal. I probably would not pull the trigger on this or even make the offer because the numbers are just, I don't think they're there. And they just made that price drop recently. If it's still there in another 60 days, maybe. For $26,000 out of pocket, you can collect 127 at a pretty burned price, and it'll take you about 17 years. So if you're local, you can knock off the management fee. If you know you do an inspection and everything turns out great, maybe you can take some of the off of the war chest. Maybe you only need 5%, 10% instead of 15. At that point, you're really just trying to make something work that's probably not going to work anyways. And there we have it, a cash and a creative analysis on 4118 East 29th Ave in Spokane, Washington. Pretty bad cash deal, and we had to burn the price pretty good to even make an okay creative deal. So if you would, drop it down in the comments. Are you going cash? Are you going creative? Are you just walking away and be like, nope, not touching that one? For me personally, I'm not touching that one. That's going to do it here for us this week in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll catch you next week.